Okay, good morning. This is Ralph Mendez, and the purpose of this um, video is to help you continue on with Chapter 3 homework. And the so let's see if we can work on Chapter 3. I sent you a video with the first four, but let's look at some of these later problems. Preparing a financial statement from a trial balance. This is exactly what you did on the midterm. And except here, they got it all mixed up. They didn't give it to you in order like we created it. So, and they want you to do statement of retained earnings and balance sheet. So you should be able to do this, but you've got to go find the revenue first. Oh, unearned revenue. Oh, no, that's a liability. Do they have any revenue? Oh, service revenue right there. Service revenue, 45,000. So this is just like the midterm. So now let's see, do I put in the 45,000? All right, and do I have another revenue? I don't see another revenue, but let's check one more time. Supplies, depreciation, dividends, building, expense, unearned revenue, interest, receivables, depreciation, retained earnings. No, I only see the one, but now you got to find the expense. There's an expense, there's an expense, there's an expense, there's an expense. So put all your expenses, and to be honest with you, then you got to put the heading here, and they already gave it to you. So I'd go down the line and see if you can find all the expense. There's depreciation expense. There's an insurance expense. There's an interest expense. See if you have all these expenses, and then you try to find them up above. Any more expenses? Oh, they got a supplies. And do they have any more? Oh, they got a wages and they got a utilities. Now, even if we don't have them, so that's 1, 2, 3, 4, 5, 6. There's 6 of them I found. Do we find 6 up here? There's 1, 2, 3, 4, 5. So there are 6 expenses. So put the expenses and then put the statement of retained earnings. Do we have any beginning retained earnings from last month or the prior periods? Yes. You start off with 40,800. So put the 40,800 plus what? What do you add to retained earnings? Income if you have it. Now, if you have a loss, you have to put less a loss. But hopefully you have income, and then what reduces it? Dividends, less dividends. All right, so that's number 8. Now, number 9, preparing closing entries. Remember the acronym REID, R-E-I-D. Close your revenue. R, E, close expenses. I, close the income summary account. And D, close your dividends. So in this case, record the entry to close the revenues. So revenues normally have a credit, so you debit them to close them. Well, what revenue do we have? Now this one's in order. You see, this is the way you did your midterm. All the income statement or items are right here, and this is all you close. You close revenue, expenses, and dividends. See, those are temporary accounts. These are permanent accounts up here. They don't close. Your cash doesn't go away. Your supplies don't go away. So all you close is this down here. Revenue, R, E, expenses, and D, dividends. In 1, 2, 3, 4, 5, you have 5 expenses and 1 revenue. So right here, 41.5, 41.5, close your revenue. And you close it to this new account, a temporary account called income summary. So it normally has a credit balance, so you debit it. Now expenses have what kind of balance? They have a debit balance, so you're going to credit all of them, but you're going to debit this income summary. If I can find it here, you debit income summary for the sum of them, just like on them. So if you had trouble on the midterm, this is a chance to practice. So we have depreciation, salaries, insurance, rent, and supplies. So depreciation, salaries, insurance, rent, supplies. So there you are. So you look at their balance. You see how they have a debit? They're on the left side. So you put them on the right side. That closes them out of the T accounts. Now, you have to add them up. You see what I mean? You got to add them up to put their, you got to add them up there to figure out how much to put in income summary. So now, when we 31,000 are the expenses and the revenue was 41, so we have a profit. So you have income summary credited for 41, and if you debited it for 31, so let's do it again. 41.5 minus 31,894, which means we have a credit balance of 9606. So you actually, that's the amount of profit. And when you have profit, where does it go to? What does it increase when you have profit? Retained earnings. Profits increase retained earnings. And by debiting the income summary, that counts closed, because this credit to income summary is the sum of the 31 and the 96. So the income summary, the debit's equal to credit, so it goes away. And what it went up? Your retained earnings. Now, remember the dividends were like 6,000. So dividends have a debit balance. So what are you going to do to dividends? Credit them 6,000. Now, what do dividends decrease? What do dividends do? What do they make go down? Your retained earnings. So your retained earnings go up by the profits. Retained earnings going up 9,000 by the profit, and down by what you share with your stockholders in the form of dividends. So the retained earnings amount is all the earnings that you've reinvested in the company over its life. All right. Let's try number 10, a classified balance sheet. Well, this is just a little bit more difficult balance sheet. It's just a little longer, okay? So in this case, you have to put, so right here, you're going to put, remember what short term and long term? Remember that? So here we put our current assets, and down here we put our plant or long-term assets. Let me see, do I have plant? Yeah, we put that there. And then over here, we put current liabilities. This is what you short term. So this is what you have that you think is going to be used up in a year, and this is what you owe within a year. 12 months is the time frame. And then down here, is this our equity? No, this is our long-term debt, right? Long-term liabilities, longer than a year. So current assets, consumed within a year. Plant assets, they last longer than a year. Current liabilities, what you owe people within a year. And long-term liabilities, what your debts are greater than a year. So if y'all have a car loan and y'all have it 4 years, what you owe in the next 12 months here and what you owe for years 2, 3, and 4 go down here. So now, what are current assets? Remember, the assets are right up here. Here are the assets: cash, receivables, supplies, trucks, and land. So you're going to put cash. I thought I was. Cash, accounts receivable. Do we have, what was it? Supplies? What else do we have? Oh, office supplies starts with an O. They haven't. Office supplies. And what are our long-term assets? Trucks. So we have trucks, and then we have accumulated depreciation, which is a contra asset. It tells us how much we've recovered. And then you have land. So there you go. So there's your assets. Now, do I have blank spaces? Yes, but that's, now to my knowledge, let's just check one thing to see. Let's just see if it adds up the numbers for us when you put them in. Yeah, see, if you put in the numbers, it's going to add them up for you. And then you'll know whether you balance or not, right? Now, remember, it's a contra asset. So you have $187,000 of trucks. But how much have you recovered? How much have you recovered through depreciation? 38,522. So 38,522, it's a credit, but you see how it subtracts it? This is a debit, that's a credit, and this tells you what it's still on the books for, which you haven't recovered. Now, then you put in land, 49,000. And there's all your total assets. You have current assets, you have long-term assets, and that adds up to total assets. Now you got to put in your liabilities. And remember, just like on the midterm, you have common stock down here. You have common stock and retained earnings, right? And this numbers eventually you get, it has to match. The 166,860 has to add up down here. Okay, so it's got to match. All right. So does it give us the retained earnings again? So 138. All right. So that's equity 174. Do we match? 36. Oh, we have to figure out what the income is. And 60, 70, 80, 90, 100. And we have to correct what the retained earnings is by the amount of the profit there. Okay, so let's see if I have any liabilities. So do I have any liabilities? I have accounts payable, 11.6, and interest payable. Accounts payable, interest payable, 11.6 and 9. And then how about long-term liabilities? Got anything long-term? Oh yeah, long-term note, 63,000. I have a long-term note, 63,000. So 60 and 20 is 80. So now do I 187 less 49 is 138, 166, and I don't match down here. So, but I know my revenue and my expenses. So let's just see if that's the 123 revenue minus 24,847 minus 61,908 minus 14 minus 11,352. So I made income. So this is greater than that. So my retained earnings, you start off with 138 minus 43 plus the income, right? So let me just see if this adds up. So when I add those three, I got the ending is 105,893. And I don't balance. So I have 3. This, I hope this minus. Do I have to put a minus in there? Okay. All right. That adds up to 138. 140, 70, 187, and 138 and 28 is 66. Now, do I put the right amount of assets? 76, 14, 72. 76, 14, 42, that's 28. And 138, 30, 40, 50, 66. Now, what do I have here? 20. Do I have a long-term note of 60? Long-term note was 60. Common stock 36,845. But my retained earnings is 138. So to be honest with you, you have to do the statement of retained earnings kind of in your head here. So it goes up 138 plus the revenue minus all these expenses. So let me try that. 138 plus 123 minus the 43. So I got the same thing, 105. So what am I missing here? 10 stock, long stock payable, interest payable, accounts payable. Oh, I know what I did wrong. I have land 49. See, I don't have the land there. I forgot all about the land. And that's 49. So where do I put accumulated depreciation? 38,522. 38,522. But this has to be a minus. There, it did. It did. minus 38,522. So it did subtract, but this has to be land, and that's 49,000. Why does it keep doing that to me? Land, 49,000. There you go. It's making me put it way over there. There you go. Now I finally balance. Oh, I'm off by a few dollars here. 38,522. 38,522. 38,522 and 49 is the land. Do I have the right amount of land? 7614, 7614, 7260. Trucks 187 less 38,522 and 49 land. 11,6, 9 and 63. 11,6, 9 and 63. And the stock is 36,845. So then let's see, what am I off? 338. No, they balance. Okay, I was scared to death. Didn't balance for y'all. Okay, they balance 226,000 3 days. All right, that's number 10. Now, profit margin is just how much money does Whataburger make on a Coke? How much money does Starbucks make on a cup of coffee? They charge you $5, and how much did it cost them? Well, just take the net income divided by the sales, okay? And that'll give you the profit margin. Income divided by sales. Income divided by sales. So how much are we making? And they want it as a percentage. So let's just say 5617 divided by 49,270 is 11.4. So when you have 0.114, how do you get something from decimal to percentage? Well, you got to multiply by 100 or move it over 2 decimal places. So if I take 0.114 and move it over 2 decimal places, it changes to 11.4. Okay, so all right, how about 12? Computing current assets, the current ratio. So take what you have short term to what you owe short term. What do you have short term, 12 months or less, to what you owe 12 months or less? And to be honest with you, you can have, so in a way to say this is for every dollar, divide current assets divided by 34,016, I have 244. So for every dollar of assets I owe $1. Every dollar of current assets owe $1. Now you can be short. You know, you can have less. Like Chatter down here owes more short term. And to be honest with you, Walmart usually has less. For every dollar they have in current assets, they owe a little bit more. So that's all. Current ratio. It's liquidity. It's measuring if you can pay your bills in the next year. All right. So let's see. I'm going to stop share. And let's see, I'll send this video on, and then I'll do these last ones here.